Welcome to Breaking News to Trading Moves. We are focused today on a policy change in the artificial intelligence sector, one that's already causing some movement in expectations, around capacity, compliance, and where users spend their time.
Yeah, the headline's pretty straightforward. OpenAI, they've announced plans to allow Erotica within ChatGPT, targeting, I believe, December 2025 for the rollout.
And the key part seems to be that this content will only be accessible to verified adults.
Exactly. That's the crucial detail. Altman says the safeguards are ready.
Right. So a major platform is sort of legitimizing a new kind of digital interaction, one that, well, needs a lot of computing power, and also that digital identity verification piece. So for you listening, this means we can try and quickly track the money and attention, see who the projected market winners might be, and maybe which companies face some immediate headwinds. Let's start with the beneficiaries, the winners. When a platform opens up something new like this, something potentially high demand, isn't it usually the ones providing the basic plumbing that benefit first, like infrastructure and compliance?
That's exactly right. Think about the usage pattern. Interacting with a companion-style AI, especially for, well, adult-themed chats, it probably demands significantly more model throughput.
More than just asking for a recipe or a quick summary.
Way more. These sessions are likely longer. They need more memory. They're highly iterative, back and forth.
Okay, so that sounds like a direct, like a sustained workout for cloud providers. Increased concurrent use, high-intensity processing. You need more hardware, more capacity, like right now.
Precisely. This is a direct benefit for companies owning or supplying that foundation. We're talking primarily Microsoft, ticker MSFT.
Because of Azure.
Yeah, their tight integration with OpenAI via the Azure platform is key. And, of course, NVIDIA, ticker NVDA. The demand for those specialized GPUs, the ones powering this heavier model use, it just got a pretty clear upward path.
Okay, but it's not just capacity, right? You mentioned verification. If Microsoft, say, provides the space for the interaction itself depends entirely on meeting that verified adult requirement. That seems like a different kind of market driver.
It absolutely is. Building capacity is step one. But the real friction point, the necessary gatekeepers, especially given the regulatory climate and the content, it's knowing who is on the other side of that screen.
And it can't just be a checkbox they tick.
No way. This needs to be a robust global standard for age gating. It has to be solid enough to satisfy lawmakers, consumer watchdogs, everyone.
So we move from the physical stuff, the cloud hardware, to the digital infrastructure of identity. We're looking at companies whose whole business is providing those kinds of secure verification services at scale.
That's right. This forces platform owners to invest, and invest heavily, in reliable identity solutions. So companies positioned to see increased demand here, those specializing in verification and security. Specifically, you could see OU, that's ticker YUU, and OKTA, ticker OKTA, benefiting. There's just this sudden critical need for scaled verification and account security across the whole ecosystem.
Okay. Now, the third category of winners you mentioned, dating and social apps. Honestly, I wouldn't have immediately connected OpenAI policy to, say, Match Group's bottom line. How does this policy change help Bumble, for example?
Well, it's kind of an arbitrage play on an accepted use case. The simple fact that a major player like OpenAI is allowing adult-themed AI interactions. It removes a huge stigma. For platforms like Match Group, ticker MTCH, and Bumble, ticker BMBL, their whole thing is facilitating personal connection.
And now they sort of have regulatory permission, almost by proxy, to explore a feature that's probably been requested, is likely sticky, and potentially premium.
Exactly. They can now look at introducing things like in-app AI companions, maybe advanced AI chat tools, other virtual upsells. They already have the user base. They just needed this use case to become more mainstream, defined by a big player before they could really monetize it.
So it opens up a potential new revenue stream using their existing users and payment systems.
It's pretty much leveraged on what they already have.
Okay. So the winners seem to be those providing the maybe less glamorous but essential ingredients, compute power, identity checks, and existing social platforms that can absorb this new function. All right, but as you said, there's always another side to it in the market. Let's look at the flip side. Which segments, which companies might face challenges or maybe just see attention wander away from their platforms?
Okay, the first group likely feeling some pressure is family-friendly social platforms. When a platform as big as ChatGPT opens the door to verified adult content, it almost automatically shifts regulatory and public scrutiny onto all general-purpose social media.
Right. Lawmakers, advocacy groups, they immediately start asking, Are your controls tight enough?
Yep. And maybe more practically, users only have so much screen time.
It's a zero-sum game, basically.
Correct. User attention is finite. If an adult user is spending more time in, say, a highly engaging AI companion mode on ChatGPT, well, that time has to come from somewhere.
Somewhere else they might have been scrolling or interacting.
Exactly. So the company's projected to feel this squeeze,
Mhm.
both in user engagement and potentially increased need for defensive compliance. You'd think of Meta platforms, ticker Meta, and Snap, ticker SNFP. They have to protect their existing, often younger user base while also competing for general adult screen time.
Okay, that makes sense. What about ad tech? You mentioned that as another area facing headwinds.
Yeah, this is about where brand money flows. Advertisers are, let's say, historically cautious around sensitive content.
They often view it as risky for their brand image.
Extremely risky. It's not just about being jittery, though. There's a structural impact on the companies whose business is placing those ads. Think about the demand-side platforms.
How so? What's the structural challenge?
Well, the issue is inventory scarcity and cost. When the content next to an ad becomes potentially riskier, like when AI can generate stuff that might brush up against brand safety lines, advertisers demand stricter filters.
Smaller, clean lists of acceptable places for their ads to appear.
Right, and that reduces the total pool of safe, monetizable inventory available to platforms like The Trade Desk, ticker TTD, and Magnite, ticker MGNI.
Ah, okay, so their main product, efficiently buying ad space, just got harder to deliver. Less inventory, maybe, and the complexity of ensuring brand safety within that smaller pool goes up.
Precisely. The cost to police their own platforms increases, while the available supply of safe ad space might shrink. It makes their overall value proposition maybe less reliable, less efficient, compared to cleaner alternatives. It's a structural headwind from increased content risk.
Okay. And the final segment of potential losers, direct competitors. What about other AI models that decide not to follow OpenAI's lead here?
Yeah, if other general-purpose chatbots, especially those from, large corporations, decide to keep tighter limits on content, well, they risk becoming the boring option, at least for a potentially sizable segment of the adult user base. Engagement could naturally tilt towards ChatGPT's adult verified mode, simply because it offers more.
Because adult users might seek a broader range of interactions, and if one platform offers it and others don't, users tend to go where the utility is.
Absolutely. And this could impact giants like Google, ticker GOOGL, and Apple, ticker AAPL. That's if they choose to stick to more restrictive policies for their own AI models. They risk losing valuable data from high-engagement adult users.
Which in turn slows down their own model development, keeps them potentially playing catch-up on features and user experience.
Could do, yeah. It's a strategic choice they'll have to make.
So what this whole situation really underscores is how a single policy decision by just one platform can immediately start redirecting capital. It seems to flow towards two main areas: compliance and capacity. The need for verification and the need for more processing power.
Yeah, and whether companies win or lose seems to depend heavily on how close they are to that increased complexity, or how they're affected by the reallocation of user attention.
So for you, the listener, the primary takeaway might be that policies legitimizing certain types of content in AI aren't just about user features. They seem to transform things like verified identity into a central, valuable, almost required asset for this emerging part of the economy. It's the on-ramp.
It really does feel like that. It's not just a nice-to-have feature anymore. It's becoming the price of admission for certain kinds of high engagement, potentially high monetization AI services.
Okay, a final thought perhaps for you to consider. As AI platforms lean more and more on proving users are verified adults, how will this rising demand for proof of identity affect user expectations and maybe even security practices across the entire digital landscape, not just within AI?
That's a big question. Worth thinking about. Well, thanks for following the money and the attention with us today.
Yes, thank you. And just a reminder, the discussion presented today is purely based on the opinion of the author of the material reviewed. This is not financial advice, and it should not be taken as a recommendation to buy or sell any of the securities mentioned. Please consult a qualified financial professional before making any investment decisions.